Good morning, good afternoon, good evening. Today we are going to start the next important chapter, that is business property. In business property, we are going to understand what are the property types, how the depreciation methods are used in the business tax returns, basis of the property, and what will be the effect if there is a like-kind exchange of a real property. Okay, so this last topic is most important because almost I can say 5 to 6 questions will be asked from this chapter. Okay, so make sure that you are going through this chapter in a very conceptual manner and not just reading the theory and completing the chapter. And don't forget to solve each and every MCQs from this chapter. Let's start with the types of property. If I talk about the types of property, we have 4 types over here. That is capital asset, section 1231 property, 1245 property, and 1250 property. Okay, so what do you mean by capital asset? Just imagine that there is a balance sheet. Okay, in balance sheet, whatever is there apart from your current asset and your fixed asset, this is your balance sheet. Apart from the fixed asset and current asset, whatever assets are there, they will be called as your capital asset. Now, what will be there apart from the fixed asset and capital current asset, right? It can be bonds or it can be any investments, right? So those are called as capital asset for the corporation. Okay, so capital asset will exclude any intangibles, any supplies, right, which are used or consumed in the ordinary course of business. Account receivable, in like notes receivable, these are the current asset. This all will be excluded. If there is any depreciable property, right, depreciable property will not be included in a capital asset because we have a separate provision for the depreciable property in section 1231 and 1245 recapture. Okay, so let's see about what do you mean by 1231 property. 1231 property is anything which is a business property and which is held for more than 1 year, right? If it is held for more than 1 year and it is used in the business, plus it should be depreciable or a real property. If, see here, the year, holding year criteria should be seen, right? Holding year criteria should be seen over here. It should be held for more than 1 year. Okay, and if it's a capital asset, then just remember one thing: in capital asset, the holding period criteria is not there, but the problem, the thing is, we have to make sure it's not a fixed asset, it's not a current asset, right? And it should not be a depreciable asset. So depreciable asset will be covered in the 1231 recapture property. Okay, so 1231 recapture property includes any business property which is used for more than 1 year and which is used in the business. And we have some separate criteria for different types of assets. For 1231, if it is sold or exchanged, any real or depreciable personal property, then the criteria is 1 year, right? If it's held for 1 year, then only it will fall under the section 1231. Next is sales or exchange of leasehold land. Its criteria is again 1 year. Next is sales or exchange of cattle, horse, right? If you are having an agriculture business, farm business is there, then it's 2 years. Sales or exchange of other livestock, it is 1 year again. Sales or exchange of unharvested crops, right? Crop plus land, both will be included in 1231 property if it is held for more than 1 year. If your land is on lease, see over here, if your land is on lease, it will not be considered in 1231 property. Only your crop and your own land, right, both will be considered as a 1231 property if it is held for more than 1 year. Next is timber, coal, iron, raw. It's all included in a 1231 if it's more than 1 year. Condemnation, like not personal use, those type of property, right, it is condemned by the government or it is acquired, mandatorily acquired. So those kind of property, if it's held for more than 1 year, then also it will be 1231 property. Casualty, theft, or if there is a if we have a losses, right, in that case, if the gains are more than the losses, in case of casualty and theft, then those type of property will also fall under 1231 property. So what is the intention to decide why, like to describe or to bifurcate why it is 1231 property? In case of 1231 property, all the gains and losses will be netted off. For example, if you have sold 5 properties, right? All the gains and losses of those 5 property will be taken as a overall. It will be netted off. Okay. Once the netted off is done, whatever is your gain, it will be considered as a capital gain. But if it's a loss, right, we'll not call it as a capital loss and carry it forward, but it will be called as an ordinary loss. All right. So if we have ordinary loss, right, previously if there is a sales of such property, sales of 1231 property, and the loss has been incurred, we might have allocated it to the ordinary loss, right? But now if there is a capital gain, right, again we are selling some 1231 property, if there is a capital gain in current year, and also we have a previously allocated ordinary losses, that will be offsetted against the current year gains. Okay, so look over here, it's current year gain, right, 1231 gain, which you are having a gain by selling the 1231 property, plus any prior year ordinary losses which you might have recorded in the books as an ordinary loss, not as a capital loss. That all losses will be added over here. Right, you can see whatever is your current year 1231 plus your 5 years prior ordinary loss. 5 years only will be considered. Prior to 5 years, those ordinary loss will not be added back. Whatever is your remaining amount, that will be called as a capital gain, and the capital gain tax rate will be applicable to that. Okay. Now 1231 property is depreciable, then you have to use 1245 and 1250. Okay, 1231 is for other than depreciable properties, other than fixed asset, other than current asset, right? 1231 property, what you will do in case of 1231, if it is held for more than the years which are mentioned over here, you will have to see that whether it's a long-term capital gain, then it will be applicable at a capital gains rate. If it's a loss, then it will be bifurcated, it will be allocated to ordinary loss. And whatever loss has been allocated in previous 5 years, that will be added back to your current year gain, if any. All right. Now let's move on to the section 1245 property. What do you mean by 1245 property? Any property which is depreciable property, but it should be other than real property. Real property means what? Real estate, right? Which are fixed to the land, building. So these are the real estate properties. Apart from that, whatever are your movable, I can say movable assets which you are having in your box, that will be called as your 1245 property. Now what will happen when you're selling this kind of property, when you're selling 1245 property, you will have to calculate the gain first. How will you calculate the gain? It's simple, selling price minus selling cost. This is what you have recovered. You will reduce the cost, the adjusted basis of that property, right? The cost minus the depreciation which you have claimed on that property will be your adjusted basis, right? So whatever gain you have incurred by selling that property, whatever income you have earned, in short, minus adjusted basis of the property. Okay, so you will get here you will get the amount of gain. Now this gain should not be called as wholly as a capital gain. It has to be allocated amongst 3 different parts. Okay, how it will be allocated? First, whatever depreciation you have claimed on the asset which you are selling, right? Whatever depreciation you have claimed, up to that amount, it will be considered as a ordinary gain. Okay, up to the amount of depreciation. For example, if you have purchased an asset for $100, let's say, and over the year, over the life till the date when you are selling the asset, you have claimed a depreciation of say $70. So now your adjusted basis, I can say, is $30. Okay, now you're selling this asset at $200. So out of this 200, I'll reduce any expenses which are incurred to sell the asset. For example, there are no expenses incurred. You will reduce the adjusted basis of stock, that is 30, which we calculated right now. Now it is $170. So this 170 will be allocated amongst 3 parts. Okay, so the first part is whatever depreciation you have claimed, up to that amount, it will be considered as an ordinary gain. So out of 170, see, total gain is 170, but out of 170, only $30 will be your ordinary gain. Now it might happen that there are some losses from the previous 5 years, right, which were added in the ordinary loss. So that losses will also be added as a ordinary gain. So this two, first and second, will be considered as an ordinary gain. Whatever is remaining apart from this two will be considered as a capital gain amount, and this will be taxable at capital gain rate. But these two figures, the first and two column, will be taxable at a ordinary income rate. Okay, so these two amounts, ordinary income, first and second column, will be called as 1245 gain, and the capital gain, which is given right here, will be called as 1231 gain. In exam, they will confuse you. They will just directly ask you this section that this is the sales of the property, this is the cost, this is the depreciation. How much will you allocate as a 1245 gain? So if you are not aware about what is 1245, you are not able to answer, right? Just remember this chart in your mind. Whatever is your selling cost, right? Whatever is your selling cost minus, selling price minus selling cost, you will reduce the adjusted basis, and there you will get the gain. So in question, you'll have to make sure what they are asking. Out of this gain, how much is 1231 gain or 1245 gain? Okay, 1245 is nothing but the ordinary gain. Means whatever depreciation you have claimed in past, it includes 179 depreciation as well. We will learn about the 179 in this chapter only. But just remember, whatever depreciation you have claimed on that asset, and if there is any loss from previous 5 years, right, that both of the amounts will be combined and considered as the ordinary income and will be taxable at the ordinary income rate. All right. Let's take one example. If the selling price is 25,000, okay, if the selling price is 25,000, cost is 20,000, and the depreciation which is claimed on the asset is 8,000. We are selling two assets, right? This is regarding the first asset. Let's see about the second asset. Second asset, the selling price is say 30,000, cost is 28,000, and depreciation charge on that second asset is 14,000. So I can say my total cost is 20 plus 28. 48,000, and my total depreciation which I have claimed on these two assets are 8,000 plus 14, which is 22,000. Okay, so how much is the total gain? So total cost minus depreciation is my adjusted basis. Now I have sold it for 25 and 30, that is 55,000. I have sold it my both the assets. I'll reduce the cost, like the adjusted basis, from this. So whatever is the remaining, the 29,000, I will have to decide whether it is an ordinary gain or whether it's a capital gain. So you're selling the asset, that doesn't mean the whole amount of gain is your capital gain, right? You will have to make sure that whatever is up to the depreciation. So in this case, we have claimed the depreciation of how much? 8,000 plus 14,000, that is 22,000. And for example, it's not mentioned here, but for example, if previously we have recognized a loss of say 6,000 and we have considered it as an ordinary loss, okay, ordinary loss we have considered it. So I'll just include it over here in this calculation, and out of 29k, 22 will be my ordinary gain, and again 6,000 will be my ordinary gain because it was previously recorded as a ordinary loss, and whatever is the remaining will be my capital gain, means it is my 1231 gain. All right, this was about 1245 property. We did about 1231. 1231 is apart from the depreciable fixed asset, current asset. 1245 is anything which is movable, means apart from real estate, right, up to the amount of depreciation, and whatever loss we have previously recognized will be considered as a ordinary income. Let's move on to section 1250 recapture. What do you mean by 1250? 1250 property is anything which is called as a real property, real estate, right? Real estate property, whether depreciable, non-depreciable, everything will be included, but it should be real estate property. So building or real property plus their structural components will be considered over here. Same way, first you will calculate the gain, that is selling price minus selling cost, right? You will reduce the adjusted basis of stock. Again, the adjusted basis is what? Nothing but a cost minus depreciation. You will reduce it, and whatever is your gain, you will allocate this gain among three again different parts. Okay, so let's see. First part is, if when using the asset, if you have followed SLM basis. What is SLM basis? Straight line method, right? You just take the cost of the asset and divide by the useful life, and the depreciation is consistent in each year, right? It's standard, right? If it's 10,000, then every year 10,000, 10,000, 10,000 depreciation will be calculated. That is simply the straight line method, right? If you are following that method, then up to that SLM depreciation, your tax rate will be 25,000. Okay, your tax rate will be 25%, not 25,000, sorry. It should be, it will be 25%. Okay. Next is, if you have not followed SLM method, right, then what you will do, you will get take the difference between the other method which you have followed, maybe makers, acres. We'll see about the depreciation method right now only. So whatever other depreciation method you have used, that amount and what should have been the depreciation if you would have used SLM method. So the difference between those two will be considered as your ordinary income. Okay. See, unrecapture is just up to the amount of SLM. SLM method, if you have followed, then just take those whole depreciation and tax it at 25%. But if you have not followed SLM, whatever is the difference between the two depreciation methods, take it and consider it as a ordinary income. That is your 1250 gain recapture, right? This is your 1250 gain, this is your 1250 gain recapture. Just remember, the depreciation method, the depreciation is being charged at the rate of interest, rate of tax rate, that is 25%. Okay, so now whatever is remaining, that will be your capital gain. Again, this will be called as your 1231 gain. Okay, and this is your 1250 gain, this is your 1250 gain. All right, next is, let's take one example on the same 1250 and 1245. If the cost of the asset is, say, for 1 lakh, right, $1 lakh, if that asset is sold for 1,50,000, okay, and the depreciation taken was 41,840. So what will be your adjusted basis? Adjusted basis is nothing but the cost minus the depreciation. So my adjusted basis, I can say 58,160, right? If I have followed, see this, we have used the different depreciation method. If I have followed the SLM depreciation method, then instead of 41,840, my depreciation would have been 37,970. So what is the difference between my method of depreciation and SLM method of depreciation? It is 3870, right? 41,840 minus 37,970, that is 3870. Let's do the calculation now. First step is, we'll see what is the gain, right? Selling price minus adjusted basis. What is my selling price? It's 1,50,000. What is my adjusted basis? Means at what amount I have recorded in my books. In my books, I have taken a different depreciation method, right? So cost minus that depreciation will be 58,160. I'll reduce the adjusted basis from the selling price. So this is my gain, I can say. My total gain is 91,840. Out of this 91,840, how much will be taxed at 25%? How much will be taxed as ordinary income? And how much will be the capital gain? Let's see. Whatever is the up to the amount of SLM. So if we have used SLM method, then the depreciation would have been 37,970. So up to this 37,970, the amount of depreciation, which is 37,970, will be taxed at 25%. Okay, then in books we have used a different method. So we know the difference. Whatever is the difference, we'll just tax it as ordinary income in our books. Okay, whatever is the remaining, right, 91,840 minus 37,970 minus 3870, which is the difference between the R method and the SLM method. Whatever is the remaining will be taxed as a capital gain rate according to section 1231, and this too will be taxed as 1250 recapture. It is, we are recapturing the benefit which you have taken on the depreciation. All right. So this was about the type of property, how you will recapture. From this three sections, there can be one or two questions. Okay, so it is very easy. Just remember the which type of property is it. First, identify the type of property. Second, identify the gain. While selling, what is the gain? Third, from that gain, how much will be allocated in which head? Just remember this chart in your mind. See, this is very easy to understand and remember during your exam instead of just going through the theories, right? Let's start with the next. That is depreciation. Okay. Depreciation, if I talk about the US tax laws or according to the IRS, the depreciation is charged according to modified accelerated cost recovery system, which we in short call it as a maker's method. Okay. All assets are divided into different classes, right? Equipment is there, furniture is there, computer is there, vehicle is there. So these are the classes, okay, are divided into those classes, and that will dictate the number of years over which the asset cost will be recovered. Whatever is your class, see, whenever you, if you are experienced, right, or if you're filing the tax returns, or if you're putting up this asset in the software, you select the class. And as you select the class, the depreciation is auto-calculated. Why? Because each class is predefined by the number of years. That if you've selected equipment or if you've selected the vehicle, the number of years over which the depreciation is to be calculated is predefined class-wise. Okay. So let's see, if I talk about the makers, in makers also there are two types of depreciation. First is our general depreciation system, which is called as GDS. Second is our alternate depreciation system, ADS system. Okay, I'll talk first about ADS. ADS is nothing but it's just a straight line method. Like over the year, the depreciation is calculated based on the life of the asset. All right, so it is called as ADS. It uses the depreciation method is SLM, right? Once you have elected the ADS, you cannot change the election for whole class. Like for example, computers. I have elected to charge ADS method. That's why you will rarely see while preparing the tax return or filing the tax return, very rare people use ADS system. Okay, but once it's elected, then whole for whole class, you will have to elect as a SLM method. ADS is nothing but a SLM method. Now let's talk about GDS. It's a general depreciation system. Means what? In this, we again have two more bifurcations. First is use 200 declining balance, and second uses 150 declining balance. We will see which class will use 200% and which class will use 150%. Okay, it's a declining balance method. 200% declining and 150% declining balance method. In this type of depreciation, you will get a higher benefit in the starting years, because see, the depreciation expense will be in a declining trend. So initially you will get a higher benefit, and then later on you will get a reduced benefit. Okay, so it is a declining balance method in which you will get maximum depreciation benefit in the first initial years of the assets. In ADS, it's simply a straight line method. Let's see what are the recovery periods can be used in the makers in GDS, right? In GDS, what are the recovery periods you are going to use? First is like you can use a 5 years, 7 years, 15 years, 20, 27.5 and 39. Let's see for which asset we can use a 5 years property, like 5 year as a year of recovery. Okay. So in 5 year, we can see it's a computer and peripheral equipments, office machineries, passenger automobiles, like which is having a lightweight truck, which is less than 8,000 lbs. Okay. Appliances, carpeting, furniture, which is used in the rental real properties, right? Only the carpeting and furniture used in the rental properties will use 5 years as a depreciation method. Next is machinery or equipments used in farming. Okay. So this will be as you select this asset, as you select the class and one of the class for this asset, it will automatically take a 5 years as a depreciation like year useful life. And here you can use either 200, right, declining balance. 200 declining balance you can use. Second is, if you want to switch to SLM, you can convert to SLM method in the first year, right? And there is an irrevocable election to apply 150. Irrevocable means you cannot then change from 150% to SLM. If you have applied 200% declining method, then you can change it to SLM method later on. But if you have taken 150% DB, right, declining balance method, you cannot shift to the SLM. So that's why it's irrevocable election. All right. So this is 5-year property, which is computer and peripherals, office machineries, machinery which are used in farming, carpeting, furniture which are used in the real rental property, any appliances, passenger automobiles like which is having a light weight of up to 8,000. All right. Next is 7-year property. If you are having a office furniture and fixtures, railroad track, agriculture machinery and equipments. See, there is a difference in these 2 points, okay? This and this, this. Here what they are saying, 5-year property, which machinery will come? Machine equipment which is used in farming, right? Machinery which are used in farming, and here the assets which are used in farming. Here only machinery and equipment is covered. Here apart from machinery and equipment, whatever is used in farming. And here agriculture machinery and equipment means what? Apart from farming, just remember one word. If it's used in farming, just directly take 5 years. If it's not used in farming, it's for any other ancillary activities, right? Not the core farming activities, used for ancillary activities, right? Like grain machine, counting of like sorting of grain machines. So that is not directly related to farming. Okay, so those type of asset will be allocated as a 7-year property. Next is 15-year property. What will be considered in the 15-year? That is roads, fences, shrubberies, qualified improvement properties and municipal wastewater treatment, right? This all type of property are given, then you will take a 15 years as the life of that property and consider the depreciation. Okay. If it's a farm building, you will take 20 years. If it's a residential rental property, residential rental means what? If you have rented your property and that property is used for residence purpose, so that is a residential rental property. In that case, the depreciation, for calculating the depreciation, the life will be taken as 27.5 years. Okay, here you can use SLM plus mid-month convention. In 15 years and 20 years, you have only one option, that is 150% declining balance. And here you can switch to SLM in first tax year, only in first tax year. Here, if it's a 5-year and the 7-year property, then it will apply a 200% DBM and it can be shifted to SLM. But if you select 150% DBM, then you cannot shift to the SLM method. All right. Next is non-residential rental property. Means what? If you have rented some property and it is used for commercial purpose, like people are not using it for residential, for living, right? The building has been rented and where the office structure is there, right? So it's 39 years will be used and mid-month convention. We'll see what is this mid-month, half year, we'll see just after this topic, it's there. Okay, conventions. So if it's a non-residential rental property, 39 years will be considered and we will take SLM plus mid-month convention. Residential rental, 27.5 years is there, SLM plus mid-month convention. Now, what do you mean by residential? If it is like more than 80% of revenue is from dwelling unit, means like hotels, motels, right? Or any establishments which is used and like for residential purpose, I can say, and more than 80% is from those dwelling units. So that is your residential rental property. Non-residential is simply the commercial building and the structures, right, which are used by the offices or renting out to any of the organizations, anything. Okay. Let's start next topic, which is depreciation convention. See, depreciation is charged when a specific asset is ready to use and it is ready to place in service. But for makers method, there are again different bifurcations. See, GDS and ADS is already there. ADS, we are clear, it's just a SLM method. But if I talk about GDS, again in their makers method, we have three different bifurcation. First is mid-month convention method. Okay, mid-month convention is there. Second is, just a minute, guys. Okay. Second is mid-quarter convention is there. Third is half-year convention is there. Okay. So what do you mean by mid-month convention? It's nothing but whatever asset you have purchased, right? Which is used for all residential, non-residential real property. Only the real property. Here only the real property is used. See, the bifurcation between this three is depending on the type of property. Okay. If it's a residential plus non-residential real property, right, then treat all property which is placed in service, disposed of during the month as placed or disposed at the midpoint of the month. Right? If, for example, in the month of February, right, you are disposing of some asset, at whatever date you have disposed, just consider it if that asset is a real property, right? It's a residential property, whether used in the business or maybe used for the residential purpose. Okay, for residential or non-residential. If that asset is sold in the month of Feb, then we will consider as it is disposed of in the mid-month of the Feb. Right, on 15th Feb, we'll just say that it has been disposed of. Okay. Next is mid-quarter. So instead of mid-month, we will consider as disposed of in the mid of quarter. Or if you have purchased, right, it's a vice versa. If you have purchased it, then we'll consider it is purchased in the mid of the quarter. Okay. So if the property is used, right, when like if it's a depreciable property, first thing, right, when the mid-month convention will be used, it is mid-quarter, when mid-month is not applicable. When mid-month will not applicable, if it's a property other than real and non-residential real property. Okay, if it's other than this property, then we will move to the mid-quarter, right? But in mid-quarter also there is one criteria. Along with that, if the total depreciable basis of maker's property in last 3 months of tax year is more than 40% of the total basis of such property, right? For example, if you have purchased the asset in the month of say July, okay, you will just see whatever are the last 3 months, October, November, December. In this 3 months, take the depreciation total. If that depreciation is more than 40% of total basis of each property placed in service during the year. For example, during the year I have placed 5 property in service. Now I want to know the property number A will be depreciated as per which method, which convention, whether it fall under the mid-quarter or not. I'll see that whether it's a real property or not. No, it's not a real property. Then I'll move to the next step, that I'll see whether all the basis of all the 5 property, right, I'll take the basis and then I'll see whatever A is been depreciated in last 3 months, that is October to December, at whatever amount the depreciation is coming. If that is more than 40% of the total basis, then it will fall under the mid-quarter convention. Right? And if it fall under the mid-quarter convention, that what will happen, we will treat all the property placed in service or disposed of during any quarter as placed or disposed of during midpoint of the quarter. This is mid-quarter convention. Next is half-year convention. What do you mean by half-year? Simply the name itself says that whenever you have purchased the asset, whether it's in the starting of the month, at the end of the month, it will be considered as you have purchased in the middle of the year. Starting of the year, ending of the year, you will consider as you have purchased it in the middle of the year, right? It if uses half year, if neither mid-month, neither mid-quarter. If this is not fulfilling, then we'll move to the mid quarter. Mid quarter is also not getting fulfilled, means here the 40% criteria is not getting fulfilled, then we will move to the half year convention. In that case, what we will do, we will treat all property as placed or disposed of during any time as placed or disposed in the midpoint of the tax year, right? During the middle of the tax year we have done. So 6 months we will consider for half year convention. Okay, taxpayer can deduct the half year depreciation for the first year. See, what is the benefit of taking half year is, in the first year you can take a depreciation on half year only, and the last year when you're selling the asset, at that time also you can take a half year depreciation. Okay, got it guys? This was all about depreciation convention methods which is used by the makers: mid month, mid quarter, half year. I'm just giving the summary again. Mid month is nothing but if it's a real property, then we will use mid month method. If it's not a real property, apart from that, any other property, and if the depreciation in the last 3 months is more than the 40% of the total basis of the asset, then we will use mid quarter. If this is also not fulfilled, we'll move to the half year convention, where we can take a 6-month depreciation in the first year where the asset is purchased, and the 6-month depreciation will be taken in the last year when the asset is sold. So this is about the methods of the depreciation convention which we can use. All right. Next is section 179 deduction, which is most important. There will be 1 or maybe 2 questions, right? Section 179 deduction can be taken on any asset which is not a real property, which is apart from land and building. Means you can take a 179 deduction on furniture, equipments, vehicles, right? Those all property will qualify for 179. But if it's a land and building, you can't take 179. What is the 179 deduction? We'll see. First thing is tangible personal property. If it falls under tangible personal property, then it is depreciable. What do you mean by tangible personal property? Means anything apart from capital asset. Apart from anything apart from capital asset. Apart from capital asset. Okay. And it should also be a property which is not a real property. Okay. Now, what will fall under the 179 property? See, these are the name of the assets. Some examples. Let's see. First is machinery and equipment. Right? As I said, it's a tangible personal property. It's not a capital asset. Okay. Next is, do you remember the definition of capital asset, guys? 1231. We did 1231. Okay. That will be our capital asset. It will fall under that criteria. But if you're purchasing anything which is machinery and equipment, which is a property which is contained in or is attached to the building, right? Such kind of machinery which need a proper infrastructure, so that is attached to the building. So that property will also be considered under 179 deduction. Gasoline, storage tanks and the pumps in retail service stations, livestock, other tangible properties that are integral part of your business, right? That are used in your business as an integral part of your final outcome. Single purpose agriculture or horticulture structure, petroleum storage or distribution facility. So this can be considered as a 179 property. If you have purchased anything from these properties, right, then you can get a deduction straight away of your cost. Whatever is your cost, it will be considered as a depreciation under section 179 deduction. Okay, but there is a limit. Overall, for all the assets, if you have purchased many assets in the year, right, you can take 179, no issue. But that 179 deduction should not be more than 1,80,000, 10 lakh 80,000, sorry, $10 lakh 80,000. It should not be. There will be one MCQ which will straight away ask you the limit, that how much will be the 179 deduction for year 2022. It is 10 lakh 80,000. All right. Now, if you have purchased a vehicle, you will have to see that whether that vehicle is your sports utility vehicle. If it is, then only $27,000 you can take as a 179 deduction on that vehicle. Okay. Next is, yeah. So this 10 lakh 80 will phase out if the cost of your equipment is over and above 26 lakh 20,000. How the phase out will be done? Phase out means what? There is a limit, right? You can get a deduction of 10 lakh 80. But if the cost of the asset is so high, it's very high, like it's over and above 26 lakh 20,000, then this 10 lakh 10 lakh 80,000 will get limited to a certain amount. How it will be calculated? See, first we will take the deduction amount, which is 10 lakh 80. Okay, guys, it's 10 lakh 80. 1050 was still previous year. Okay, 10 lakh 80 we will take. We'll reduce the phase out amount. How it will be done? Whatever is the cost of your asset. For example, say your cost of the assets cumulatively is say 30 lakhs. So you will reduce from 30 lakh, you will reduce the limit, which is 2620. Up to 2620, you can take the whole 10 lakh 80, right? But over and above, you cannot take. So you will see what amount is going over and above 26 lakh 20. So this amount you will reduce from this 10 lakh 80, and whatever is the amount you are getting after reducing this phase out limit, right? This will be your maximum deduction. Over and above, you cannot get the deduction. Above this, you cannot take 179 deduction. See, this calculation you will rarely see in some small clients because they purchase some assets which are not more than 26 lakh 20, right? But in the higher clients, the bigger clients who used to purchase, have a lot of purchasing of the asset, you will see this calculation. It will be done in those cases, right? Now, this 10 lakh 80 will get totally phased out, means you will not get any deduction if the cost of the property is 36 lakh 70, right? More than 36 lakh 70, if you have purchased the asset, then your deduction amount will be 0 for 179. All right. Next is, see, this deduction, we have already done the partnership or corporation. If it is yet to be done, then no issue. If in case of partnership and corporations, S corporation, the shareholders get the benefit of this 179 deduction, right? So whatever is the partner share, whatever is the percentage, you will multiply it by 10 lakh 80, whatever deduction they are getting, right? Or whatever is the shareholders share, you will multiply it by 10 lakh 80. That amount they can claim in their 1040 return as a 179 deduction. Do you remember the schedule K and K1s we have done? Or if you have not done, then you will see in the business partnership chapter and the corporation chapter, right? In the S corp and the partnership, all the incomes are passed through to the partners and the S corps, okay, the shareholders of the S corps. So in that case, the 179 deduction benefit will also be passed through to them. So they can take this deduction in their tax return. Okay. Next is, this 179 deduction will be reduced, right? Whatever we have done just above, it's the same thing. The 10 lakh 80,000 is the maximum. If it's a sports utility vehicle, it's 27,000. And it will be phased out if the cost is more than 27 lakh. See, in case of sports utility vehicle, the phase out limit will start from 27 lakh. And if it's just a minute, not a sports. Here, see, this 26 lakh 20 was for 2021. Now it is 27 lakh. Okay. If it's over and above 27 lakh, then you will reduce the 27 lakh from the cost. Whatever is the amount, you will phase it out from your limit. All right, just make the correction if it's not there in your book then. Okay. Next is phase out start at 27 lakh, right? There will be no deduction if your cost of the asset is more than 36 lakh 70,000. All right. The property should be used in business for more than 50%. If it's used for personal plus business, then you will see over and above 50%, or if it's less than 50%. Over and above whatever is there, you will get the deduction, right, for that. But now, see, when you purchase the asset, you are using it for more than 50%. Now your usage has reduced to less than 50. At that time, what will happen? Previously, whatever 179 was allowed, that deduction will be recaptured. Means you will have to add that benefit in your income. Okay. So what is the maximum deduction we can take? So there are like different filing status, different entities, corporation, which will get a different deductions. Let's see. If it's a MFS, right, you will combine the property, right, all the properties you will combine and take deduction. Else you can say 5,40,000 per person. Combine all the property, just compare it. See, it's 10,80,000, but since it's a MFS, it will be divided by the 2, and 5,40,000 can be taken per person. That's why MFS, it will be 5,40,000. If you're filing MFJ and if you have a 179 deduction in your K1s, then you can take the whole like 10,80,000 as a deduction. Okay. Then there is a corporation. If you're a corporation, maximum, see, corporation don't pass their incomes to the shareholders or their partners or the owners, I can say. So corporation will take this deduction in their books itself in the P&L, right? So maximum deduction will be taxable income or 10,80,000, whichever is lower. Up to the taxable income only they will take. So if it's a S corporation, then what will happen? If it's an S corporation, we'll take the income, we'll add the amount which is paid to the shareholder as a compensation. We will add back that amount. And whatever is the amount we are getting, that is the maximum deduction which will be allowed as a 179 deduction. Okay. But if it's a partnership, what we will do, we'll just add same way. Here it's called a compensation to shareholders. There it is called as a guaranteed payment, right? Whatever is a guaranteed payment which is paid to the partnership, right? The partners by the partnership firm will be added back to the income, and that amount will be your maximum deduction which will be allowed as a 179. Okay. Next is share of individual which will pass through the individual will be passed through S corp and the shareholders here. Next section is our 168K, that is special depreciation allowance. So bonus depreciation. Here, if you are having a property which is a qualified property, then in that case 100% deduction of your cost will be allowed as a bonus depreciation in the first year of purchase. See, either you can take 179 deduction you can take, or you can go for bonus depreciation. In both case, the benefit will be recaptured, right? If you have taken the benefit, and in case of 179 property, the usage is less than 50%, then that benefit will be recaptured. But in case of special depreciation, you can take 100% bonus depreciation on the purchase of a qualified property. Right? Now, what do you mean by qualified property? Qualified property is something which is tangible personal property, which is depreciated under maker's method. Plus, the recovery period is 20 years, up to 20 years. So, I can say the residential rental property will not cover over here, because the recovery period in residential was 27.5. In case of commercial rented properties, 39. So again here the real estate properties will not be included, because the criteria here is the 20 years, right? I don't know why my pen is not working. So the 20 years criteria will be the provision due to which the real estate property will not be included. All right. Next is water utility property. If it's a water utility property, next computer software is there, qualified leasehold improvement property is there, qualified film, television, live theoretical production is there, qualified reuse and recycling property is there, qualified second generation biofuel plant property is there. Okay, so this type of property, if you have purchased, then it will fall under the 168K, that is a special depreciation. You can take the whole 100% as a bonus depreciation for those assets. Now, how to claim the bonus? First, either you can go for 179 or you can opt out. Okay, if you have not claimed 179, right, then you can go for bonus depreciation. If you're not claiming for bonus depreciation, just take one depreciation, that is maker's depreciation, according to the maker's different methods, right? Mid-month, remember the conventions that you can go through. Either take 179 or take bonus depreciation or take maker's method, straightforward. Now here In case of bonus depreciation, if it's a listed property, then recapture rule will apply. Recapture means what? If the business use is reduced to less than 50%, then whole benefit which you have claimed, right, as a depreciation, bonus depreciation, will be recaptured, means it will be taxable back. So what do you mean by listed property? Listed property is anything which is other than computer and peripheral equipment. Don't get confused, guys. There will be one or two questions from this, and they will include computer and peripherals. Make sure in listed property, computer and peripherals are not included. Okay, so keeps people, listed property rule will keep people from claiming tax deduction for the personal use of property, means your use of the business property should be for business use only. If you have used it for the personal use, then your benefit which you have taken previously will be recaptured. Okay, let's see what will be there in the listed property. First is passenger automobiles who is having weight of less than 6,000 pounds. Okay, first see whether it's a high weight vehicle or low weight. If the vehicle's weight is up to 6,000 pounds, then it will be called as a passenger automobile, which is eligible as a listed property. Any other property for transportation, unless it is a expected vehicle. If it's expected, then it will not be considered. What do you mean by expected vehicle? If the gross weight of that vehicle, see, the gross weight of that vehicle is, if the gross weight of that vehicle is 14,000 and more than 14,000 pounds, plus vehicle is designated to carry the cargo, right? The trucks, cargos, trucks which are used to carry the cargo. So those type of vehicle and the weight is more than 14,000 pounds, and they are called expected vehicle. And you cannot take like 100% depreciation as a bonus depreciation on those type of vehicles, right? Because they will not be considered as a listed property. Listed property, passenger automobile will be there, and any other property used for transportation unless it is a expected vehicle. Next is property generally used for entertainment, recreational or amusement, right? If it's a filmmaker, if a person is a director, filmmaker, and is having the equipments, those equipments will be used in entertainment, recreational activities, right? They will be considered under the definition of listed property. Okay. Now, for these three properties, passenger automobile, any other transport vehicle, and recreational entertainment assets. For this three property, if they meet the business use requirement, right? And what do you mean by business use? Means it is qualified for, like, it is used for more than 50% of its total asset in the business purpose. If they do not meet the business use requirement, means they are used for personal for more than 50%, then what will happen? They will not qualify for 179 deduction, they will not qualify for bonus deduction, and in makers method only SLM ADS will apply. So this is the importance of listed property. If it's a listed property, if it fall under these three criteria, right, then in that case just see that whether it's for business use, it's used for business, or if it's used for personal. If it's used for personal, then you will have to like consider that there will be no deduction for 179, no deduction for bonus. Makers SLM ADS will only be applied, right? Whatever is the excess depreciation, right, if any claimed in the prior years, right, in prior years, if you have claimed the depreciation which is excess, which is not according to this three, and if now the business use has reduced to 50%, then whatever depreciation you have claimed previously, which is not SLM ADS method, and you have claimed 179 or bonus, all the amount will be added to your income if the business use has been, the property used has been reduced to less than 50% of the business. All right, this is about listed property. Next important is depreciation of passenger automobiles. There is an amendment in 2022. I have already included it over here. What is the allowable depreciation amount has been amended. Okay, the limits has been changed, I can say. So if it's a depreciation of a passenger automobiles, right, section 280F will be applicable. The limit is annual cost recovery. Okay, annual cost recovery. If it's a luxury automobile, or then 100% it should be used in the business. Okay, so 168K bonus depreciation is not claimed, then only this this depreciation method will be applicable. If you have already claimed the bonus depreciation, then you cannot again take the depreciation on the passenger automobiles, right? What will be the allowed depreciation? For first year, in the year of purchase, you can take 19,200 straight away flat amount as a depreciation. Second year, you can take 18,000. Third year, you can take 10,800. And each year later than third year, you can take 6,460 as a depreciation. Here, the limits have been changed. The limits were different. Okay. So, allowable depreciation will be depending on the year in which. The first year, when the asset is purchased, it will be 19,200. Then 18,000, 10,800. And then after third year, it will be 6,460 in each year. Okay, this will increase 3 times if you have the asset, you have the vehicle which falls under the clean fuel, hybrid car, electric car, right? This 3 criteria, if they are fulfilled, then the whole depreciation amount will be multiplied by 3, means you can take a 3 times of it, right? And apart from this, apart from the 19,200, 18, 10, 800, you can take additional 8,000 for the first year, right? First year depreciation. Hence, 18,200 for first year. There is one error actually. Instead of 18,200, 19,200 plus 8,000. Whatever is the amount, it will be the first year depreciation. Okay. So for the first year only, 8,000 additional depreciation can be taken. Now, we will see the usage of the vehicle. If it's used 100% in your business, then the full amount will be used or will be taken as a depreciation, which is mentioned here in the table. But if it's used for up to 75% only, then 75% you can take. If it is used up to 50%, right? If it's used up to 50%, then you can take, but less than 50 it is used, then there is no deduction and you'll have to use SLM method of ADS only. Okay. There are some vehicles which are not subject to the limits. Those limits which they are not subject to that limit. What are that? Those that is ambulance or hearse, taxis, transport vehicle which are used in transport service for hire. See, if it's used in the business, if it's used for the transport service for hiring, your main business is hiring, then it will not fall under this this depreciation method. Okay, it will fall under the different methods, right? Next is qualified non-personal use vehicle modified for the business. If it's a non-personal use vehicle but it's just modified and used in the business, right, then it will not be falling under this depreciation table. If bonus depreciation which is already claimed and you're using already more than 50%, then it will qualify for bonus depreciation. You cannot claim first the bonus depreciation and from second year you can fall under this table. So it's not allowed. Okay. If the weight of the vehicle is more than 6,000 pounds, then also you will not be able to take this depreciation. Right, passenger automobile depreciation will be allowed apart from this limits which is mentioned over here. Vehicle not subject to limits. Apart from this, whatever is your vehicle you are taking, you are using in the business, will be allowed as a depreciation based on this table. De minimis safe harbor rule. What do you mean by de minimis safe harbor rule? It's a rule which is given by the IRS. Means if you are purchasing the asset up to the certain limit, then it will be totally expensed off in your profit and loss statement. If it's over and above that limit, okay, if it's over and above this limit which is mentioned over here, it will be capitalized and it will be included in your balance sheet as an asset and you can take a depreciation benefit on those. Okay, so for de minimis safe harbor rule, we have 2 criteria. That is, if you are filing AFS. AFS means annual financial statement are filed to IRS, right? If IRS having annual financial statement, then 5,000 limit will apply. So you will see whatever is your expense which you are incurring. If it's up to 5,000, if you are filing AFS, right, then that will be considered as a normal expense and go to the P&L statement. If it's over and above this 5,000, if you are filing the AFS over and above the 5,000 limit, then it will be capitalized and added to the fixed asset schedule, that is 4562 is the schedule which we generally use for adding the fixed asset. Okay, it will be considered as a fixed asset if it's more than 5,000. The expense is more than 5,000. All right. Next is $2,500 will be considered if you're not filing the AFS. Annual financial statement, if you're not presenting it to the IRS, if you have elected out, then you can take like 2,500 as an option, that up to 2,500 you can expense it out. Of more than 2,500 you can just capitalize it. All right. Next is, if the taxpayer at the beginning of the tax year elects the safe harbor rule, right? If they elects to apply the safe harbor rule, this one, then the taxpayer may deduct or treat as material or supplies and not capitalize. Means whatever is the amount, they can treat as an expense in the profit and loss, if the amount is up to the limit which is mentioned above at the beginning of the tax year, or if the life of the asset is up to 12 months only, then also you can directly expense it off in the P&L statement. Okay. In case of de minimis election, you just have to make sure you attach the statement to a timely filed return. Each return, if you're claiming a de minimis election, there is one option to elect the de minimis election. If you're doing this, then you'll have to attach a statement along with your return. All right. The statement title is, you will see in the return, the statement title is simply 1263A, right? 1F de minimis safe harbor election, and you will include the taxpayer's name, address, and TIN number, if any, or SSN number. Okay. So in case of, this was about the simple rule. Now if I talk about C Corp, S Corp and partnership, the entity will make election, right? In case of S Corp and partnership, entity will make the election. Now let's see, if it's a repair and maintenance, and if the property is used in rental, okay, if it's a repair and maintenance and property is used in the rental business, then GDS 5-year recovery will be done in case of appliance, carpeting, furniture, and which are used in renting property, right? We have seen that in case the topic of depreciation, 5-year property includes appliance, carpeting, furniture which is used in the rental property, right? And GDS recovery 15 years will be used if it's a land improvement such as roads, shrubberies, or fences, right, which is used to just improve the property. So 15 years will be used in that case, and normal 5 years will be used in case of appliance, carpeting, and furniture. All right. Then there's the addition and improvement such as new roof. If the new roof has been added, okay, new roof has been added to the property, then we will use the same period as that of the property on which the improvement is made. Whatever improvement is made on the property, right, will use the same depreciation method that is used for the property. That's simple. If it's a residential, we'll take 27.5 years. If it's a non-residential commercial, then we'll take a 39 years for that new roof addition. All right. This is about rental property. Rental property, there can be repairs and maintenance, right? In that repairs and maintenance, we have to apply the depreciation method. Okay. Next is cost incurred during the improvement. If that cost, it can be direct, it can be indirect, both will be capitalized if it is over and above $200. It's over and above $200. All the costs incurred to improve the following 8 items are always capitalized. There will be one question from this topic. If you have improved, made improvement, or you have added the items such as HVAC, plumbing, electricals, right, elevators, fire protection and alarm securities, gas distribution and escalators. So this are if added in your property, in your business property or in your rental property, if these improvements are done or added, whatever is the amount, maybe it's $5 or maybe it's $200, 2,000, 2 lakh, whatever XYZ amount is there, it will be capitalized always, always and always capitalize. Always capitalize. Remember this thing. All right. Next is additional elections. So what are the additional elections you can do? Safe harbor for small taxpayers and routine maintenance safe harbor. So see, normally what happens, if the first I'll talk about routine maintenance. Normally if a taxpayer is doing some routine maintenance, right, in their machineries or equipments or factory, means that are necessary, those repairs are necessary, then deduct the whole amount as expense. Whether it's, see, if it's over and above 2500, you don't have to capitalize it, because those are the routine maintenance that are going to come on day-to-day basis and that are required. So those amount will not going to capitalize it, will just expense it off. Means if it is once, more than once in a class life. Class life means what? 5 years, 7 years, 15 years, whatever we have done that. If those type of expense are going to come, like recurring expenses, repairs which we need to operate those equipment, that will have to consider as an expense and will not capitalize it. Okay. If it's a cost incurred for recurring activities, as I said, cost arises from use in the trade or business, right? And it keeps the property in operating condition. The taxpayer reasonably expects at any time to perform the recurring activity, like the repairs and maintenance, oiling, machineries, just regular maintenance will be considered as a routine maintenance safe harbor. Then you, in case of, if it's a routine maintenance safe harbor, right, then you are going to always expense it off. Okay, deduct the whole as an expense. But if it's let's say if it's a small taxpayer, what do you mean by small taxpayer? If your average of 3 years gross receipts, average of 3 years is up to 10 million, and building unadjusted basis is having up to $1 million, right? In business, if your gross receipts are up to 10 million in previous 3 years and your building is having unadjusted basis. What do you mean by unadjusted? Means apart from depreciation, just take the cost basis. Whatever is the cost you have purchased the building and using it in the business, if the unadjusted basis, which is excluding the depreciation, is up to 1 million, right, then you will be called as a small taxpayer. If you are a small taxpayer, then what you will do? Expense of all the expenses. Whatever expense you are incurring, right, you will expense it off. But if the expense is over and above $10,000 or 2% of unadjusted basis, whichever is lower, or just figure it out, this amount, lower amount. If your expense is more than this lower amount, then you are going to capitalize it. All right, you are going to capitalize it. So this was about the small taxpayers, and second was routine maintenance. Simple. This was all about the depreciation. Next is, we have mentioned here some of the steps where you will figure out how to recapture. This topic is related to the first topic which we have done, the 179, not the first, but the 179 deduction we have done, right? If your business use has changed or it's less than 50%, then you'll have to recapture it. So how we will do? Let's see. Step 1, figure the depreciation when you're using a SLM. Okay. First step is what? Simply you'll have to find out what is the amount of depreciation which is claimed if you're using SLM method, right? That would allow on that would have been allowed on 179 deduction, right? Begin with the year you place the property in service and include the year of recapture. From the date of service till the date when the usage of the property is reduced to 50% than the business use, means in that year you'll have to recapture. From the date of purchase till the date where the asset is used for less than 50%, just include, just calculate the depreciation as per SLM from this date to this date. Okay. Next, what you will do, you will subtract the depreciation figure. Whatever depreciation you have claimed now, subtract the depreciation figure from step 1. Whatever 179 depreciation you have claimed, just reduce that amount by step 1. This is the amount you are going to recapture. Means what IRS is saying, ideally if you would have taken a asset, and if you have not taken a depreciation benefit, then you would have used SLM method. They deem it as SLM method. So take out the difference between SLM and 179. Actually, what you have taken 179 deduction, you will just take it and reduce the SLM depreciation that you would have taken. That amount you need to recapture and include it as an income. Let's see one example. For example, if your cost of the asset you are purchasing in year 1 is 24,000, okay, and in year 1 itself you have claimed 179 deduction. In year 3, now you are using this asset for personal use. What you will do, first you will see that 24,000 was the cost. What was the depreciation, which for example the class of the life is 5 years. So 24,000 divided by 5, 4,800 is my SLM depreciation. So how much I'll recapture? I am using it for personal use in 3rd year. So 4,800 is my SLM method, right? And I'll just multiply it by 50% because half year convention if I am using, right, then multiply it by 50%. So year 1, year of purchase will use half year, right? If it's a half, if you're using the half year convention, then it will be 2,400. Year 2 will take the full depreciation. Year 3 also will take the full depreciation. So whatever is the total, right, this is our as per the SLM method. But actually we have claimed whole 24,000. So whatever is the difference, 24 minus 12, this 12,000 will be recaptured, means added back to the income. Okay, got it guys? So this was simply about the recapture rule in case of 179 deduction. Next is intangibles. Okay, so if you are having an intangible property, right, it will be amortized only if it is purchased by you and not just it's getting transferred in case of acquisition or merger. But if it's purchased by you, the intangibles are purchased, whatever cost you have paid, you will take a 180 months as a amortization years, right, as amortization value. Cost divided by 180, whatever is the month which you have used during the current year will be multiplied. There will be one question from this topic. Okay, simple, just take the cost, divide by 180 and just see in current year how many months have you used. For example, if the asset is purchased in June, then in this multiplication you will have to multiply it by 7 months. Don't forget to multiply it by 7 months. People make this common mistake. What they do, they just take the cost, divide by 180 and that is the answer. No, you will multiply it by the month which is used in that particular tax year. Okay. If depreciable property is improved, right, the taxpayer must treat that improvement as a separate depreciable property and not to add it to the basis. There is an improvement, you will not add it to the asset value, not add it to the cost. Cost is whatever you have purchased. You're not going to change anything in that. But if there is an improvement, you will add it as a separate asset, as an improvement in the asset, and the depreciation will be provided separately on that improvement. What do you mean by improvement? It's simple addition or any partial improvement or repairment of the property that adds the value to the property, right? Appreciably, it lengthens the useful life or adapts it to a different use. Then we can call it as a depreciable property. All right. Next is depletion reduction, which is very simple. It can be claimed if you have an economic interest in the mineral property or standing timber, right? What are the natural resources, and that if you have a interest, then there is the word which is used for that depreciation is a depletion reduction. Depletion is the using up of natural resources by mining, quarrying, drilling, felling of the timber trees, right? The depletion reduction allows the owner to operate, right, what it allows to operate or the operator to account for reduction in the product reserves and can be figured out using POCM. What is POCM? Percentage of completion method. This can be used to figure out the depletion reduction in case of natural resources, the timbers or the quarries, oil wells, right? Taxpayer can claim deduction for oil wells but not refinery. There will be one question on this theory, 1 mark question will be there, right? If it's an oil well, then you can take deduction. If it's a refinery, oil refinery, you cannot take the deduction or as a depletion. All right. Next is section 197. Now it's 197. 179 is clear. It's now 197. That is nothing but the intangible. What will be included in intangible? It will be goodwill, going concern value, workforce in place, right? Workforce in place. If you have acquired the workforce, right, while acquiring the other business, and if you have paid for that acquisition of workforce in place, business books and records and operating systems or any other information base which including the list of information concerning the current and prospective customers, right? This all will fall under the intangibles. Patents, copyrights, customer based intangibles, supplier based intangibles, license, permits, right, which are granted by the government. A convention, convenant, which is like if we have agreed not to have a compete with other with the other business, and if they have paid for it, right, then we have taken a compete agreement with the other person and we have paid for it, and that is our intangible, right? Next is franchisee, trademark, trade names, contract for use of or term interest in any item in this list. Okay, so this will be intangibles and that will be amortized over 180 months, which we have done over here. Intangibles, if only purchased, this should be purchased. Okay, now depreciation recapture in case of installment sale. If there is an installment sale, remember this thing, if the asset is sold, right, then there is an option to the buyer that you can pay the amount on installment basis. Installment basis, if you're paying, right, and if the recapture rule applies, means previously you have taken 179 deduction, previously you have taken bonus deductions, right, on the listed properties, then recapture rule if applies in the first year, right, the first year when you're selling the asset, whether your amount is recovered or not, first year the whole depreciation will be recaptured and included in your gain. So what you will do, you will report whole recapture gain in the year of sale, whether or not installment payment was received. As and when the payment is received, then you will recognize the recapturing rule. It's not like that. The year in which you're selling, in that year only you will have to recapture the amount of depreciation plus any ordinary loss. Remember the ordinary loss which was previously recognized, now it will be recaptured. All right, so this was all about the depreciation and the types of properties. Next important topic which we are going to start is basis of property, which we'll do in the next session. Okay, there you will see what is the basis of property, how the cost is calculated, for what amount it will be adjusted, what is the real properties cost basis. Then we have adjusted basis, property recovered for services, bargain purchase, involuntary conversions are there. This is important actually, involuntary conversions. Then we have a like kind exchange, the most favorite topic of mine, plus favorite topic in exam of the examiner, because most of the question will be based on this topic, that is like kind exchange. And you know guys, I have included over here a lot of examples. Just remember these examples and you will able to solve any question which come in exam. So we'll do it in very detailed and a conceptual manner. Like this topic is so easy and like very important as well. So yeah, tomorrow we'll complete this chapter, that is basis and the like kind exchange property. So that's it for the day. Have a great day guys. Bye.